Hello there, Maverick Currency Traders. This is Rob. It is August 7th, 2024, and wow, we are living in very, very exciting times. Let's jump into it. In this session, we're going to be talking about what happened during the day. Lots and lots of news, lots of volatility going on. It's been a great trading environment, but this is where we really have to be on our toes with risk management, making sure that we are long the strong, short the weak. Today, we had a big reversal in yen. We'll jump into it.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, so let's jump into the main news of the day. We had a central bank announcement last night. The RBA kept rates steady, which was as expected, but they actually came out and were a little bit more hawkish than we all expected. And they said a future rate hike isn't off the table. That's a very strange thing to say in this kind of market environment. We also got big news out of the Bank of Japan. We all know what's been going on with the yen and the carry trade, and it's just been contagious across all asset classes. Well, the Bank of Japan came out and said, look, we are not going to raise rates during this market volatility. And that seemed to calm the markets down. The yen turned around, the equities spiked back up, and at the first of the day, equities were up 1.5%, 2%. By the end of the day, they were down a full percent. So big reversals in equities. And let's take a look at the currencies here, because I'm really fascinated with, lately there's been this really strong risk on, risk off correlation. As markets drop, we see that the yen and the Swiss franc go higher and the growth currencies go lower. Take a look at today. Today, we got the correlation overnight. When the markets ran up, the yen and Swiss franc dropped, just like they should on a risk on, risk off. However, the markets turned around in the US session and went negative, and we did not see a reversal in the yen and the Swiss franc. We always talk about how important it is that when something that should happen doesn't happen, we have to pay attention to that and say, oh, that correlation is no longer there. The Kiwi got a ton of buying, and that's what I was really interested to see, what currency was going to get bought when the market was in a good mood. And we got the answer today, the Kiwi and the CAD. Those were the two best performing currencies here on the day. We go in and we take a look at the S&P was down 0.75%. Crypto down again. We have not liked crypto for a while. It's just been in free fall. Oil had a big jump, likely due to the Mideast tensions. There are many reports of airlines being asked not to fly over airspace over the next 24 hours. It's highly likely some military action over the next 24 hours. What does that mean? It just means heightened volatility. That's all it means. Is we are not guaranteed, but we are highly likely to see even more volatility over the next 24 hours. Crypto got hit, and there's been no bottom to Ethereum. Ethereum has just been in free fall ever since the Ethereum ETFs came out in late July. So the question is, where are we? We are at a -3. We had just now seen the 20-day moving average cross below the 50-day moving average. That is not a good thing. And we talked about how we are now in a bearish market. Every rally is being sold. So just like when we were in a bull market, every sell-off was being bought, every rally is now being sold. Until that changes, we are going to be bearish. So you have to assume that this market is going to continue to head lower. And if equities continue to head lower, then we really still have kind of the same story that we've had. Let's take a look and see what we do have on the calendar. We also did get the employment report out of New Zealand, and it was much better than expected. One of the reasons why the Kiwi was up so nicely today. The only thing really, we've got some small news tonight. I think that Kiwi inflation expectations, this is a key one. If you are looking to make a news trade or if you are trading Kiwi, you absolutely need to be watching this. If this comes out higher than expected, remember that Kiwi has gotten obliterated lately. It could get a bid under it. So I do not hate Kiwi long here, but I want to see that number come out good. And then on Friday, we've got Canadian employment report. We're going to take a look at some charts here, but I do like the Canadian dollar and the Kiwi to the long side, but I don't want to buy them until this market has stopped just in free fall. So let's take a look at some currencies. Let's take a look first at yen. Okay, so yen, we've got a big reversal here. Big reversal, runs up. Okay, at this point, this is a pattern. This is a chart pattern. We've got a long upper shadow here. We've got a long upper shadow here. We've got a hanging man here, and we got a confirmation candle here. So on a daily chart, we do have a confirmation that we have hit a swing high. However, we do not have confirmation that we are no longer in an uptrend. We are absolutely still in an uptrend on the yen. We're just in a pullback. We don't love to make trades on pullbacks. So if anyone here is saying, I want to go short yen, look, it's a decent trade, but understand that whenever you are counter trend on the daily chart, that your trade has a very small window to work before the trend likely continues. So like I said, I don't hate yen short here, but understand you are counter trend on the daily, which means you have to be thinking this trade is fairly short term in nature. We take a look at the Swiss franc. We see we have the same pattern there as well. And frankly, this one looks better to me, but all it's saying is it's in a pullback. If we take a look at dollar, dollar has really poked its head out of the bottom of this trading range, but there's been no momentum behind it. And you can see we're trying to get back into that range. I don't like dollar here at all. Totally uninterested in dollar trades. Same with euro, just uninterested in euro. Look at these long wicks. These long wicks are going to kill anyone who is trading with fairly close stops. So whenever I see that, I'm like, ugh, no thank you. I want no part of it. We've got the pound is trending lower. So for someone looking for a short, the pound is absolutely on the table for a short. And we take a look at the CAD. CAD is having a nice bounce off the bottom. But again, just like we talked about with yen and Swiss franc, this is short in term. This is short in term. It's making a good bounce. Kiwi is having a good bounce as well. And frankly, when you take a look at the Kiwi chart compared to the CAD chart, the Kiwi chart has really put in a better bottom. As you can see, we just made this slightly lower bottom. We've recovered, and we're already back up above the last swing high, where the CAD is nowhere even near it. Let's check in on the Aussie last, and you can see pitiful, pitiful bounces, especially off of the RBA. These long upper shadows are telling you the Aussie does not want to go higher. So for me, Aussie is in the short category, especially if this equity market is going lower. This is where we are at the moment on our velocity score. So this is, again, not the long-term trend score, but we're taking a look at a smaller time frame velocity. This is not what the trend scoreboard looks like. On the trend scoreboard, we have the Swiss franc and yen are the strongest on the longer-term trend, but they're in this little pullback. So on the velocity, this is where we are right now. Now at Maverick, we don't love counter trend trading, and that's exactly what this is setting up for, is for us to be long two of the weaker currencies that are having a strong bounce at the moment, and short the strongest currencies that are having a sell-off at the moment. If you are okay with counter trend trading, where it's short in nature, then yes, you know what? Long Kiwi, long CAD, short yen, short Swiss franc. I don't like those trades. So the big question is, how do you then make a trade if you're not going to go after that? Well, now I got to come over here and look at the pound. I got to look at the pound and say, okay, the pound outside of these four currencies is the best looking trade. What can I trade it against? And this is where I'm really liking the pound versus Kiwi. That Kiwi to me has put in a better bottom than the CAD. That's the currency cross that I am going to be looking at over the next 24 hours. The other one is Aussie yen and Aussie Swiss franc. All right, let's put in pound Kiwi. All right, pound Kiwi, as you can see, has been dropping nicely. We had a big run over the last couple of weeks. We've now turned, we've dropped, we rallied, we've dropped. Okay, we've got a little rally going on here. We love these little rallies to bring it back up into an area. The first area I'm going to be looking at is the 13 EMA. So somewhere around 212, probably 212 at that time. So that's only about 40 pips from here. So look, let's get a little bit more bounce up here. Remember, we do have that inflation expectations number tonight in the Kiwi. I would love to get a little bounce up into this area, have that report come out. And then for me, it's going to be short pound versus the Kiwi, hopefully somewhere around this 212 area. We're just going to have to wait and see. But for right here at the moment, you can see that we are having a little bit of a bounce. So it's not ready to go yet. If this market continues to head lower, then for me, the Aussie is the best short. The Aussie had a really lazy, bad bounce with long upper shadows on the daily chart. So now I'm saying, okay, well, I want to be looking to short that. I could look to short that against the yen. And again, this is a perfectly fine pattern here. We've got a 4-hour chart. We've fallen. We've had a rally here. We just want to see this rally turn over a little bit more. Going beneath this EMA, possibly going below this parabolic SAR. That's a pretty far way away here. This thing is really moving here. So for me, I think I'm going to use this EMA here as kind of the line in sand. Once it goes below this EMA at 95.47, I think that will be a decent entry point. And then, of course, you want to have pretty liberal stops here. There's lots of volatility. I mean, look at this move, 90 up to 97. That is a 7.4% move over 2 days. That's huge. That is a huge move. So let's understand the kind of market environment we're in. If you're going to play, shrink your position size down, make your stop a lot wider. That's how you want to go. If you don't want to go yen, then look at Swiss franc. Aussie Swiss franc, if we go down even more, same thing here. So 56 is where that EMA is. Once it goes below 56, I'll put an alert there, and I'll start looking for potential entries at this point. Now, this will be if we continue to see a risk-off move overnight, which the futures are already down another, 0.5% after the close of the market. So it looks like we will have continued selling throughout the night. We are in high volatility trading, everyone. This is a dangerous moment, but it's also a moment where there are a lot of pips on the table. So we like trading more in these situations, but we always have a very, very healthy fear of the market to where we know anything can happen. So again, wider stops, smaller positions. Pyramiding works wonderfully in these kind of markets. Take smaller positions, wider stops. As they go for you, take more and more and more positions, tighten up your stops, and then if you get the big move, you've got a nice position built up on this. Thank you for joining me, everyone. Again, be safe overnight. Likely to see some big moves. Take care.